UK, which was mentioned on the slides. But we're seeing GDP growth of 6% in Ireland, very strong retail sales. Is that something you considered in your analysis?
Regarding what is going on in Ireland, yes, definitely over 2015, Ireland did show a strong performance, but with our analysis and looking at how they ended the year and how we focus them going forward, they will not be able to maintain that strong performance compared to the 6% that they were able to achieve. We forecast them growing at a much lower rate, or around 4%, and even with that growth, our biggest concern around that market is once again around what they're going to do to the margins of SPAR Group. So SPAR in South Africa, with the large format stores that it does run, has very high margins, and in the competitive Irish market, the margins are much lower, and that margin pressure will eventually end up feeding into earnings.
Just quickly to add to what he said, our revenue growth estimates, we used Irish GDP we've split the SPAR Group's revenue into two pieces. We split it into the South African leg as well as the Irish leg, which the revenue growth rate we used was Irish GDP as an estimate. So it was incorporated into our analyses, just to answer your question about that.
In your free cash flow model, your TV sensitivity, can you explain how you got this constant growth rate of 6.72%?
The growth rate was based on South African inflation and on Irish inflation, and we apportioned the amounts based on the percentage of revenue that is generated from each of those geographic regions.
Conceptually, if you're growing at 6.72% to perpetuity, this company will be much bigger than the United States at some stage.
Yeah, I think it also, because of the purchasing power of our currency, our inflation is, what was our inflation forecast?
Our inflation forecasts are currently at 7.1%. So our terminal growth rate, which we assumed, remember we're growing this at a rand denomination. So thus our purchasing power looking forward is going to weaken. Currently our inflation estimates are at 7.1. So thus we apportioned the South African inflation as well as Irish inflation to give us a terminal growth rate as well. So yes, looking at it, the company can grow at 6.7%. That's basically performing under inflationary expectations for the next 5 years.
You mentioned that there were a couple other companies that would be sort of the better houses on a bad block. Why do you attribute, or to what do you attribute the higher multiple that they've traditionally had relative to that peer group then?
With regards to the multiple that they've had, we attribute it to two aspects of what they've done. They unlike the other retailers in South Africa, cover a whole range of LSM, so they go all the way down from the bottom to the top. And we believe that because of that, the market has given them has shown more faith and rewarded them for the fact that in tougher times they still have exposure to the higher end of the market, and for the rest of the time they still have exposure to the lower end of the market. We believe that's a big part of it, and we think that at the moment the higher multiple is also attributed to them moving offshore. A big theme in the South African market is the rand hedge, considering what the currency is doing at the moment. So they've also been rewarded for the fact that they have looked offshore with their BW acquisitions and further acquisitions that have alluded to getting involved in.
Can you explain the nature of the relationship between SPAR and their affiliates in South Africa? I'm not sure I understood.
SPAR Group, as mentioned, operates on a voluntary trading partner model. So if you would like to open a SPAR store within South Africa, you need to go to the company, buy the name from SPAR Group. After that, SPAR Group does not obtain any franchise revenue from the stores that open under them. Their only gains from having SPAR stores is delivering as a wholesaler to their stores, which further places pressure on these stores because it's necessary for SPAR to maintain double margins, both for the voluntary trade partners as well as the group itself, along with the macroeconomic conditions, puts pressure on the margins.
And who sets the retail prices? The store owner?
The store owner sets certain retail prices. There are, however, certain goods governed by law that has fixed prices or are exempt of tax that operate.
And to add on to what he says, I mean, the whole issue that we had with the trading model is that there's huge reputational risk. So basically, if with this whole voluntary trading model, the franchisee sort of gives the perception of what the consumer thinks of SPAR. So the whole risk around this whole model of theirs is that if one franchisee treats their store badly, treats their consumers badly, they don't take care of their goods and services, they're not cleanly, the perception on SPAR as a whole from the consumer perspective is that SPAR is a bad brand. So that's a sort of a flaw that we have with their trading model.
Also, a further key thing with regards to SPAR was, if you take a look at the franchisee model, a key thing for us as a group is that organic growth is capped. Currently, the South African Reserve Bank is currently hiking interest rates in South Africa to combat inflation, which is thus capping economic growth. So thus, you're sitting in South Africa with a consumer that's wallet is getting all the thinner. So you're sitting with consumers in South Africa, and especially the middle class, that can't afford anymore to open franchises like these, or to open a family business like this, which, how can I say, the places this company under quite a risk to expand organically within the country.
Under what scenario will you actually change your recommendation from a sell to hold or buy?
Basically, one of the key things for us with regards to SPAR, and we discussed this as a group as well, is in South Africa we currently favor shares that gives you a rand hedge. So the more revenue you generate from European counterparts or from overseas counterparts would be all the more positive. Currently, BWG contributes to 30% of 30% of the total group's revenue. So that's 70% is still coming out of South Africa. So currently, if SPAR can give us information and provide us with plans to expand further in Europe to maybe give us 60% of revenue coming out of the EU area or an overseas area that can provide an effective rand hedge, we'd be more excited about the stock.
Is that in contradiction with your case of not being the impact of being in a market in Europe with lower growth, and that's part of your negative outlook on the company? So looking to create a hedge on the currency side when adding more international exposure to lower growth markets, do you see that as really a positive?
I mean, we don't see it as a positive. If you look at Europe as a whole right now, you have the European Central Bank, who's basically went out all guns blazing at the last meeting in March. So basically, what more can the European Central Bank sort of do to create and push inflation in Europe and stimulate growth in Europe? So we believe that, yes, the Irish or the whole rand hedge story would be a great story in terms of turning our view around, but we do not believe that Europe at the moment has the necessary monetary policies to stimulate growth and sort of inflation in the environment. That's why we are sort of against this whole SPAR basically moving into the Eurozone, or we don't see them realizing the margin gains, because currently at the moment, until Europe comes up with a solution for them stimulating growth and inflation, that's when it'll be more positive on the Europe story.
Just to cover up the potential contradictory nature of this, a key assumption for us is basically the weakening rand that devalued drastically against currencies from overseas, and including one of the currencies that the rand devalued drastically against was the euro. So that would be a key, and companies that are incorporated from overseas get quite rewarded on the JSE for earning overseas revenue. So that was one of the key assumptions for us, is the fact that we as the University of Johannesburg are afraid of a devaluating rand. So we would reward a company for actually incorporating overseas.
You mentioned talks with SPAR in Switzerland. Can you be more specific?
Well, SPAR recently announced them acquiring a stake in SPAR Switzerland. So they actually concluded the deal a few weeks ago in terms of taking over the SPAR in Switzerland. But the only problem we have with that is that SPAR in Switzerland is only 2% of the market. The main retailers in Switzerland is Migros and Coop. So we don't still believe that SPAR will really benefit from this acquisition, because unless they go against your Migros and Coop, then they'll only benefit. But at the moment, Migros and Coop run the market, they dominate the market, and SPAR Switzerland is only 2% of the market.
What was the narrative behind the acquisition of the Irish business? Do you remember? Did you read that in our report?
With regards to the acquisition of the Irish business, a lot of it lay around the fact that they believed as SPAR Group from South Africa, with all the expertise in terms of distribution and costs,